So this is a continuation of this question for Mr. X and Mr. Y. All right. We already did the appropriation of profits. Okay. Or- First thing we did the appropriation of profits. Now today, we're going to prepare the capital and current accounts, Mr. X and Mr. Y. All right. So the capital account, as I said, is a fixed capital account. You're just recording only capital that is coming in. All right. Then the current account, that's where that information for the appropriations, you're going to see it. Okay. So both of these accounts, remember, they both increase with credit and reduce with debit. All right. That's the secret for both capital and the current account. Okay. They increase with credit and they reduce with debit. Just remember that these accounts increase with with credit, and they reduce with debit. So whatever goes on the credit side, it means it's increasing the money for the partner. If it goes on the debit side, it is lowering. Okay. All right. So we refer back to this question here for Mr. X and Mr. Y. We need to first prepare their capital accounts. Okay, prepare the capital accounts for Mr. X and Y. So this is how we're going to do it. Capital accounts. Come- Okay, so this is a capital account for Mr. X. All right, so we come to these capital balances here. All right, they told us what were the capital balances. On 31st December 2026, capital balances was 60,000. Capital balances was Mr. X 14,000, Mr. Y 12,000. So for Mr. X, on his capital balance, he's just going to put on the credit side 14,000. All right. Mr. Y, the same thing. You're just going to put on his capital account 12,000. Capital balance, Mr. Y, 12,000. Okay. That's all you put in the capital account. All right. It's just the capital that's been put in. If they added in additional capital, all right, if they introduced additional capital into the business, would have put that. But no additional capital was put in. All right. So their capital balances will just remain the same here. Okay. You balance carried it down 14,000 here. Okay. So that's that for the capital accounts. You just put in how much capital they have in. Any questions before now we go to the current accounts? Here, balance carried down, CD, at about 12,000. Okay. The accounts are just going to remain like this until either one of them dies or withdraws from the partnership, or they introduce new capital, right? But the accounts will just stay like this. As the name even suggests, this is a fixed capital account. Okay, so it will be rarely changing. Okay, yes. Now we can go to the current accounts. Okay, this is where now that information from the appropriations are going to come in. Current accounts. Okay, so we're going to start with Mr. X. Okay, first we find out what was the current account balance. So we say current account balances Mr. X 1,500, Mr. Y 2,000. Okay, so the balances are usually on the credit side. Okay, so when we say balance brought down, Mr. X 1,500. Okay, now we go to the information on from the appropriation account to see what goes on to Mr. X's thing. Okay. All right. So interest on office wait drawings. All right. Here we've been told Mr. X drawings 1,500. So these drawings are going to go on the debit side of the current account. So we're going to say drawings 1,500. Okay. Because remember when you do drawings, you're removing money from your account basically and from the business for your personal use. Okay, so drawings reduces how much money you and the business have. Then we've also got the interest on drawings, okay, which is 90 kwacha. So this also go on the debit side, interest on drawings. Okay. Then we come here, interest on capital, Mr. X, 1,260. So we put interest on capital. $1,260. Mr. X also has a salary of 20,000. So on the credit side, again, you're going to put salary 20,000. Commission, Mr. X had a commission of 1,000. Okay, then Mr. X's share of the residual profit, 11,726.7. Okay, remember, everything on the credit side is increasing how much the partner has. Share of profit, 11,216, 11,726.7. Right. So now we find the new balance of Mr. X's current account. Okay, so we total up both debit side and credit side. So let's say total for the credit side, going to say 1,500. 1,500 plus 1,260 plus 20,000 plus 1,000 plus 11,726.7. We get, so the total on the credit side is 35,486.7. Now in the exam, don't put the way I put the totals here, okay? It's just for that. This is for illustration paper. Not ever put any number here like how I'm doing. Okay. Okay, then on the debit side, the total is 1,590. Okay, so the balance carried down will always be on the lower side. So balance carried down, you're going to say 35,486.7 minus 1,590. So 35,486.7 minus 1,590. Going to get 33,896.7. All right. So that's the balance for Mr. X on his current account. Okay. So when the new year comes, the next period, the next financial year, this is the balance that's going to be in his account, Mr. X. Any questions? Or go to Mr. Y. All right. Next, we go to Mr. Y's current account. Okay, so Mr. Y, let's see, Mr. Y Current account balance 2,000, so it's on the credit side. Okay. Drawings, Mr. Y, 1,000. That goes on the debit side. Interest on drawings for Mr. Y, that was 60. Okay, so this is the trick, colleagues, all right? When you do the appropriation, just remember this interest on drawings and drawings debit side. Then these that you're subtracting from the profit, these are going on the credit side. Okay. Yes, so it is 60 kwacha is interest on drawings. 60. Okay. Then we now go to interest on capital. Mr. Y, 1,080. Mr. Oh, wait, that's Mr. X. Sorry. 1,080. Mr. Y doesn't have a salary. Okay. So we won't put any salary there. Commission, Mr. Y's commission, according to the question, commission was 1,000. 1,000. Oh, yes. Commission 1,000. Then the share of the profit. So for Mr. Y, his share of the profit was 23,453.3. Now, if the partnership makes a loss, the share of the losses will be on the debit side. Okay, colleagues? Just remember that. If partnerships make a loss, the share of the losses are going to go on the debit side. Don't put share of the loss on the credit side. Credit side is increasing the money in for the individual partner. All right. Okay, so we find out now the total debit and credit. So the credit side, we're going to say 2,000 plus 1,080 plus 1,000 plus 23,453.3. Okay, we get 27,533.3. The debit side is just 1,060. So the balance carried down always comes on the lower side, which is the debit side in this case. So 27,533.3 minus 1,060. 27,533.3 minus 1,060. We get 26,473. 173.3. All right. So this is going to be the balance for Mr. Y in the next financial period. All right, his capital balance, I mean his current account balance is going to be in this. And his capital balance is going to still be the same amount in his capital account. Yes. So this is the current account for Mr. X and Mr. Y. So remember, these accounts, both current and the capital account, they increase with credit. So every credit entry is increasing the money for the partner. And they reduce with debit. Debit entries just means it's reducing the money for the partner.